The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. Welcome to TFNN. Thanks so much for tuning in, kicking your trading day off right here with me. And we got markets this morning jumping around, quite the selling last night. In the Tiger's Den, talking about it all the way down to 68.17. You got a problem with whether it's property developers in China, whether it's Oracle earnings disappointing yet again. I say yet again, they blew it apart last earnings, right? But then it was all selling, and they missed the mark on revenue this time. They're selling off Oracle. And we got jobless claims this morning. And the headline this morning, jobless claims jumped by the most since 2020. Now, we had a holiday week, which really depressed things, down to 192,000, and we're back to 236, pretty much right where you were, okay? What did we come in at? 228 on November 7th, 229 on October 31st. We had 217 on November 21st, so we had a downtick going into Thanksgiving. Nonetheless, initial claims up by 44,000. That's the biggest jump since when? When COVID hit. March of 2020. That's when COVID hit. Initial claims are choppy around the holidays, as they put it. 4-week average, 216,000. Continuing claims dropped to 1.84 million. The biggest decline in 4 years. Continuing claims are 1 week delayed. So the continuing claims that we just got are for the holiday week, which was this downtick right here. And look at the uptick we got, right? For initial claims, and we'll see if continuing has the same deal, and you'll probably get an uptick to some degree. Continuing claims, 1 week delayed versus initial. Not surprising you get a downtick when this is digesting the data that we got from last week during the holiday week. But nonetheless, you got initial claims. We're back. We're pushing 250,000 jobs. Chairman Powell, yesterday, we get a cut. And Chairman Powell was talking about, you're going to see revisions in the jobs. This economy is weak. That's what they're worried about. They've cut. They're near neutral. How's that? Almost 100 points from the high to the low. You accelerate on that 2 p.m. cut, and we give it all back, and we're right back to basically where we were prior to that number. You jump over the 10-year right now. Higher price, lower yield. Coming at you. We're up by 14 ticks right now at 112.20. You got the 10-year at 4.11. We were at 4.19, almost 4.2 coming into that number. It's been in the exact opposite of the prior meetings. The prior meetings, you had rates dropping, hitting lows, coming into the meeting, and then we would rise from there. In this meeting, you accelerated higher in yield. You pushed it to the point that we had the 10-year pushing almost 4.2, and we get a cut, and we get $40 billion of Treasury note purchases that start tomorrow. Okay, you jump over the 2-year. The 2 years not stopping. $40 billion. We understand. If you're listening to this program, all right, you're in the market. You understand if there's more buyers in the market, price and volume, okay, well, there's $40 billion of demand that's coming into this market on a monthly basis. You better believe the price is going up and the yield is going down. And the 2-year right now is at 3.51. Okay, 3.51. We take a look at the 2-year in terms of yield. That's the price. Yeah, you come into the Fed at about 3.6. We were as high as 3.62 going back to, yesterday morning at about 7 in the morning. It's a substantial drop on a 2-year. You back it up on a 30-day basis, you see we've been as low as 3.46 on November 25th. At that time, we had the 10-year at about 4% on the dot. 10 years at about 4.11 right now. But it's a substantial drop from yesterday, and the market's pricing in the easing. Right? They have quantitative tightening. We're back to quantitative easing. We're in a quantitative easing environment, which is remarkable when you look at where equities are. All right, you jump over to Oracle shares. Yeah, it's not stopping there just yet. From 223 down to 193, you're down by $30 right now. The expected move was about $21, $22, 10%. So it's a substantial move. They miss on revenue. Talking guidance, you take a look at this thing. And yeah, you're going to open. Check it out. The high is at 2024. You got a high of 198. That bar right there goes down to 171. That's where we're trading into. You got the lows back here in November. We're well below those. No, we're not. Excuse me. 185. But yeah, we closed out. We opened that bar at 196. So we're going to open in the tail somewhere right down here, 193. And as you can see, right into this consolidation late last year. That's the election. The high from that bar is 190. We're opening at 193. All right, just as we were coming on the air, you jump over to Disney. Look at this give back. Whew. So, Disney's got $1 billion deal with with OpenAI. Now, what's remarkable here is, so they're going to invest $1 billion into OpenAI, and then they're going to allow their characters on Sora video generator. Now, you know, when it comes to animated, I feel like AI is going to be able to create animated movies with one person in front of a computer in a matter of hours. Movies that used to cost $100 to $500 million in a digital atmosphere. Disney's going to make $1 billion investment. It's going to allow users to make videos with the Sora app. Sora will be able to make content with more than 200 characters. Disney, Marvel, Pixar, Star Wars. Tommy loves this stuff. Users will be able to draw from the same IP while using ChatGPT images where they can use natural language. And what's remarkable is here, you would think that, as in this deal goes bigger than that, right? They imagine if you're running a digital studio, my goodness, you think of how much money these movies make, okay? And the power that this is going to have to create it. But in reality, it would go the other way sometimes, right? As in OpenAI should almost be licensing the copyrighted characters that Disney has that people are signing up for Sora to use. But it's the other way. Disney's going to invest an equity investment. And then the users, and then they're going to be an equity partner. And yeah, digital movies, they're all going to be done by AI in a matter of years, if not sooner. It's a perfect recipe. You don't need humans. They're all just animated digital interfaces anyway, and the computer's going to be creating them. We jump over to Netflix as the saga continues for Warner Brothers. This thing's under pressure. You're slightly positive today at $93. Warner Brothers pushing $30. We're at $29.50 right now, flat on the session. Paramount Skydance, $14.75, giving back yesterday's gains as well. We jump over to metals. Gold, up by $30. And how about silver? It's not stopping. Come on, catch up. There we go. $63.25 in the overnight session. We're back above $63 right now. And yeah, look at that dollar. We've been talking about it, folks. Dollar weakness. We're coming back. We're taking a look at the dollar. We'll take a look at some gold equities as well. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We take a look at Netflix on a longer-term basis. So quite a pullback. We're not even at the 382. Something to keep in mind. You get a run from $15 to $135 in a straight line move. You got to be prepared for some volatility at some point. Goes the same way with the market. Hasn't happened yet. At some point, we're going to get a natural retracement, folks, in a bull market that is just ripping higher when you have a NASDAQ trading from about 10,000 to 25,000. This is not some super risky exploratory mining company. Okay, this is the NASDAQ 100, man. You're up 150% from where we were 3 years ago. 150%, and that's cherry picking the low. Okay, but you're still up substantially if you cherry pick the high from 4 years ago. That's where things get wild, man. You're talking about being up 9,000 points if you cherry pick the high from there. So pretty remarkable. Netflix jumping back to. Okay, you talk about the debt load. Now, they used to have the name Debtflix at one point. That was a long time ago, man, before they started generating cash. And check out the cash that they are generating. Cash flows, free cash flow by quarter. Look at this, right? It's a new world for them. Well, guess what? They are not uncomfortable with debt and negative cash flows. They did it for a long time, and their stock did magnificently. Look at the free cash flow coming into 2020. I'm going to show you what their chart looks like. Yeah, that's 2020. Was this a run-up? That's 19. Okay, so you can see. Yeah, here's the end of 19. Okay, and the point here is watch how much free cash flow matters to these share prices. Okay, and be wary that it's going to matter right now. Now, when this equity was churning out all of this negative free cash flow, $1.57 billion in December 2019. Okay, this equity was struggling at $33. You were well off the highs of $42 in 2018. Then what happens, right? Towards the end of 2021, look at the cash flow. Look at the cash flow. March, okay? And then, yeah, it's been just bananas since they started doing ads. Look at this. March of 23 was things really start. There's March of 23. Okay? Now, the current price they're paying includes $59 billion in temporary debt financing. Okay, and that's basically just a bridge loan to get them through the transaction, and then they'll do a longer-term loan after that. That number's going up. They're not getting this company for the price that they put in initially. Not happening, okay? Paramount Skydance has made it known, $30, and that's not even their best and final. $5.8 billion is on the table if it doesn't get done, okay? Netflix would have about $75 billion in debt if the acquisition goes through based on the latest terms, up from $15 billion now. They're a $390 billion company. That is a substantial difference, okay? The company is expected next year to generate $20 billion of earnings available to pay interest. Oh, yeah. At that level, net debt would equal about 3.7 times EBITDA. Then in 2027, earnings would probably grow and bring the leverage ratio down to the mid-2 range, a more typical level for an investment-grade company. So they're going to be a little bit out of stretch for a year. They're very strong on credit. They're growing revenue, growing EBITDA, growing free cash flow. Yes, but guess what? Any company taking on $15 billion in debt and jumping it to 75, and it's probably going to go up to about $100 billion in debt, they're only a $400 billion company. Okay, this is not like an Apple or an Amazon. They're a 400, they're actually less than that today. Okay? $396 billion company. Excuse me. So, you know, keep your eye on those free cash flows, because if all goes well, it goes well. But this debt's approaching a level that, yeah, Netflix is the cash king, but they don't mind selling. Over the following years, the debt climbed as high as 18.5 as it gained more rights. And yeah, they did have that name back in the day. But in 2023, more than $6.9 billion of free cash flow every year. They got upgraded to investment grade. And quote unquote, they've earned the right. And they're going to be, yeah, you better believe it in the long run. Okay, but this is the heat you're facing, and we're not even at the 382 yet. I would say that we're at least going to test that area, and it brings you back to basically the election. That wide price spread, the highs of November of 2024, correlating to the lows, put it on a weekly, of the beginning of 2025. Yeah, kind of this 382 right here, natural area. That's where we first accelerated to with volume November 18th. You exploded higher earnings in January of this year. You came back and tested that area again, $88 to $90. I mean, you're going to get some volume on Netflix. I mean, look at this. Last week, you accelerate lower on volume, 289 million. We've already done 226 million, and we got 2 full days of trading yet. You're going to break it. You're going to do it with volume. No, you could blow away the volume that we did April 21st. You could have the highest volume. Look at this. We got negative volume here. Oof. All right, Netflix under pressure. Look at the entire give back. Disney's saying, hey, what's going on? Where's all the AI love? I thought you just announced a deal with OpenAI and your stock pops like 10%. Jump over to Lilly. So obesity drugs in focus again. Gotta break out of this downtrend. And yeah, Lilly. Oh, I got too many tabs. We're going to talk about home prices when we come back. All right, we'll talk about Lilly. Here we go. How about cutting your body weight by 23% in 68 weeks, I think it is? 68 weeks. Yeah. It's quite a number, man. Study participants experienced more than 62% reduction in knee pain. I mean, all of this stuff's related, right? If you're reducing your weight by 23%, I mean, an average male probably jumping on these things is what? An easy 200 pounds at a minimum, I would guess. Yeah, almost like a 50-pound weight loss for 200. I mean, if you're weighing 250, that's 55 plus. We're coming back. We'll talk some Lilly. We'll talk some home builders. Stay tuned, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. You got the NASDAQ. Tech stocks under pressure with Oracle disappointing. We have the S&Ps negative by 24 points. They were buying the dip last night, man, about 10 o'clock. We hit a low of 68.17. We're trading right now off 25 points at 68.67. And realistically, we're right back to where we were actually on that first acceleration on the Fed. You came into that Fed decision at 68.45. You popped initially on the announcement, and you accelerated further with Chairman Powell in his press conference up to highs just before the close. Tech stocks, we are under pressure this morning. Off by 0.8%. They're selling it on the open. And let's jump around. Oracle shares down by 15.5%. Is this going to hurt the bid for Warner Brothers? It's possible, man. You think about Ellison's wealth. My goodness, how many shares does he have of Oracle and that wealth? Has anybody ever lost so much wealth in so little period of time? He's lost half his wealth. It's going to be like $100+ billion. I don't feel bad for him. He'll be okay. But that is a substantial pullback, and we're now right back into this area that we were at late last year. And you were as low as 118 on that April acceleration. So quite the acceleration yet last year. But yes, Oracle weighing down the tech sector. NVIDIA pushing the overnight lows. NVIDIA is down by 2.3% right now. AMD off by 2.7%. Micron off by 1.25% right now. Broadcom off by 3.3% right now. We jump over to the big dogs. Amazon off by 0.8%. Microsoft under pressure yesterday. A little bit of a gain, up by 0.1% this morning. And Google down by 0.1%. Jump over to Tesla shares off by 0.8%. We check in on Disney, up by 1.3%. I don't have the fundamental knowledge, okay? But if I feel like if I was a company like Disney and I could invest $1 billion in OpenAI and they gave me the keys to the real vault that allowed me to use all the capabilities of that type of AI video generation, etc., the power that these companies are going to wield, the productivity, the margins they're going to be able to kill in terms of, man, the amount of product they're going to be able to put out when you're talking about digital, okay, animation, and straight out movies in general. You got Disney up by 1.7% right now. All right, let's talk a little bit of housing. Hold on, that's not the one. There we go, one more. Here we go. All right, home prices go negative for the first time in over 2 years and may stay that way for a while. Well, that's a hot take on top of news. Is this analysis or is it news, right? Is it opinion or is it news? Well, it may do anything. It's like to put it, it might, do this or that, right? Might stay there for a while, might not. Active listings in November, 13% higher than last year. New listings, just 1.7% higher. Mortgage rates, yeah, we're in a tough range right now, okay? We're probably pushing 6.2, 6.3, maybe 6.5, depending on your credit worthiness. Prices nationally are down less than 1%. Certain markets are seeing more significant drops. Austin, Texas, down 10%. Denver, down 5%. Tampa, Florida, and Houston saw prices fall 4%. I tell you, folks, the market's doing pretty well around here. Okay, yeah, it's not gangbusters, and we got more houses. We got a supply issue in terms of that because guess what? Demand is difficult. Affording a house right now with affordability of everything, with where rates are right now, it's a tough scenario. But we got this K-shaped economy, and there's plenty of buyers out there in certain areas, okay? The last part I'll say about this, okay? Not last part. But what I keep reminding myself is, if you look at these houses, okay, we are on the verge of lower interest rates. It is going to happen, okay? You're out there this morning with the Treasury Secretary, okay, proposing a major overhaul of the regulatory body created from the financial crisis. It's almost been 20 years. It doesn't take us long sometimes to roll back the things that happened, okay? And here we are. In the approach to how the government approaches finance, everything is going to run it hot right now, okay? And there's a real risk to think that asset prices, you're seeing it happen in gold, okay? You're seeing it happen in silver, and real estate is real as well. And what this has to do with, okay, Financial Stability Oversight Council. Now, the Treasury Secretary is the chair of that council, and he basically wants it to go away. will recommend changing the approach. The agency's focus had been on tightening regulations and oversight for the institutions it oversees. The new approach will switch that and push for looser regulations and freer approach. The council will work with and support member agencies in considering whether aspects of the U.S. financial regulatory framework impose undue burdens and negatively impact economic growth, thereby undermining financial stability. Imagine, on the heels of the financial crisis, making the case that if we regulate these financial institutions, we're undermining financial stability. This was formed after the 2008 crisis, and it was to monitor and address the kind of systematic risk that led to the collapse of major Wall Street institutions. The commission was created in 2010 as an outgrowth of efforts to prevent that crisis again. The Treasury Secretary chairs the commission. And so that coincides with a meeting today at which he delivers a letter updating where it stands on its work. So we're going to loosen financial regulations, okay? Now, these regulations got put in place at around 2008 and 2009, 2010. Look at the charts of the banks, folks. Okay? Look at the charts of the banks. We're going to run things hot, man. Any bank you choose. Okay? Goldman Sachs. We were at 150 around that time. Yeah, it's 15 years ago. Okay? Look at the run up, and now we're going to loosen things up. And that's great. There's risks that come with it, but the point being, housing prices are not going to drop dramatically when we have inflation pushing 3%. We have rates coming down. We got a new Fed chair coming in the line in May. They start in June. They're going to have 5 meetings this year alone, the new Fed chair. And you have an administration that has 3 years left that is going to loosen regulations completely. The risk, if anything, is inflation, folks. Okay, now there is a slowdown in this economy. You better believe tariffs matter. They're taxes, okay? You don't just create a magic 8 ball and say that taxes don't matter anymore, that somehow they're not a burden on the economy, that they won't get either passed over to consumers or cut profits for companies. That's how it works. They're a tax. The exporter, the importer, and the consumer. Those are the 3 components that pay for that tax. Right now, it's split between the 3. History says that eventually those costs get pushed off to the consumers. So yeah, there is some weakness, there's inflation, but we're going to run this economy hot. And so I do not see some kind of massive risk for home prices tanking. Talk about 4%. Be careful. The last thing I would suggest you do is load up on cash right now. Okay? Now you can be prudent, okay? But be aware and watch that inflation because it is the risk. We'll take a look at those home builders. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets in the red. The Dow up by 304 right now. Check out that acceleration. We jump over to the Dow. What do we got? We got Visa up by 2.2% right now. The banks, JP Morgan up by 0.8%. Johnson & Johnson trading up by 1.1. UNH up a full percentage point. Home Depot higher as well. Mickey D's in the green. Procter & Gamble and Disney. But the big dogs, yeah. We jump over to the S&P 500. There's not a single stock in the green in information technology. I shouldn't say that. Salesforce is in the green. Adobe slightly in the green. Financials trading higher. Yeah, consumer staples in the green as well, and real estate with some lofty numbers. Talk about healthcare. Let's jump to Lilly. So they get the results from their latest weight loss drug. Let me get this name. Retatrutide, I think. Retatrutide. Seems like they'd want to work on, I mean, where's the marketing team that's involved in all this, right? Zepbound's a good one. Wegovy's a good one. Retatrutide. That's a tongue twister, man. You got to put that R in there after the T, after the T, after the A. Retatrutide. It works by combining 3 different gut hormones, GLP-1, GIP, and glucagon. All right? Giving it an edge over treatments like Zepbound and Novo's Wegovy. This trial was 68 weeks long. They had 2 different doses, 9 milligrams and 12 milligrams, which both lowered markers of heart disease, blood pressure. Some patients completely free of knee pain by the end of the trial. Now, it's always, though, when you look at this, and what they talk about in this one in particular, okay, cut weight loss by 23%. This one in particular, they're talking about might be geared towards extremely obese individuals, okay? And the reason why is when they go down to the trial results and they get into the people who dropped out, there it is. Patients still experience side effects. Almost 1 in 5 people on the highest dose dropped out of the trial. Now, it sounds like a small number, but boy, this is like the holy grail. You take 1 shot, you lose all the weight that's been a problem for a good portion of your life if you're this obese, okay? But nausea, diarrhea, constipation, more than 1 in 5 patients on the higher dose experienced dyspepsia. That's not how it's an unpleasant nerve sensation, okay? Generally mild for patients and rarely led to treatment discontinuation. Patients whose BMI was lower than 35 were more likely to drop out of the trial, including because they felt they lost too much weight. I've never heard of such a thing. You don't drop out of a trial because you're losing too much weight. You drop out of a trial because you're losing too much weight and the side effects are too harsh. So there's this holy grail out there, but be aware of these side effects, all right? Because they're going to be tempting to all of us out there. And realize that there's risk versus reward in everything, folks. And the other part of these weight loss drugs that go in is that you can lose a substantial amount of muscle on these weight losses. And pretty remarkable. Lilly gives it back, man. Those are some big numbers. And the market says, yeah, we already priced that in, I guess, when we traded from 623 up to 1111, giving back some of those gains. But you can lose a substantial amount of muscle. Okay, if you just stop eating and you're in a caloric deficit that's dramatic, you'll lose a lot of fat, but you'll also lose a lot of muscle. So if you're ever in one of these, okay, try and eat a lot of protein. The greatest way to not lose muscle if you're on some of these weight loss drugs or just trying to lose weight in general and you're not eating as much, if you add a lot of protein in and you work out a little bit in the main, your body says, hey, guess what? We're not getting enough calories, that we're going to burn some of our stored energy, okay? But what it says is, but we can't take the muscle because, number one, we have the protein that the muscle needs, so we'll use that for the muscle. And number two, whatever our body's going through, we're using all these muscles right now, so we can't let them wane. So let's use the calories that we're taking in and the protein we're taking in to keep the muscle, and we'll go through the fat to burn those calories. If you don't eat the protein, you're going to lose parts of muscle, and that's very hard to gain back. Now, in the grand scheme of things, if you're obese, morbidly obese, then yeah, you don't need to be that worried about losing the muscle, because the health impact alone of losing that weight is going to be dramatic. And yeah, you talk about pain everywhere, back pain, knee pain, blood pressure, right? It's all a product of being overweight, and that's not rocket science. You can go to any doctor and they'll tell you that. Yeah. All right. And then we drop into the other one. So this one's out there from Bloomberg this morning, talking about healthy baby formula. Okay. And so you have Abbott out here, which makes Similac, which is, as far as I know, the biggest brand out there. And they're getting sued for the fact that this condition, NEC, okay, which causes intestinal issues in premature babies, and they can cause death. And one jury's awarded $500 million to a family that alleged their baby girl suffered from brain damage after she ingested the formula. Now, the science is not murky, but it's not understood well. What they do understand about this is that the absence of human milk increases the risk rather than anything harmful in the formula. Now, that's what the Abbott says, okay? That's the Abbott spokesperson, okay? You can still develop this condition without taking formula. It's not completely unknown. The medical community does not fully understand what causes this condition, though it does know that babies who receive breast milk are at a much lower risk of developing it. Babies who receive breast milk, in general, okay, and it makes sense. It's just the evolution. It's a mother's milk, right? It makes sense that that's a good thing for a baby. Formula goes great. It does well. But not surprising that it might help a few things, whether it's just the immune system passing on just straight out some of the immunity that the mother has to a baby that has no immunity, all this stuff, okay? But what this talks about here is that Abbott's on the full-out press. Now, they are a $220 billion company. They don't make a lot of money from selling formula, okay? And they're basically saying, hey, you either shield us of all this immunity, or we're just going to stop making baby formula completely because it's not worth it. Abbott says it's ready to work with anyone committed to following the science and medical experts to ensure continued access to these products. Now, here's the kicker of all this, okay? They talk about the FDA in here, of course. They talk about, unfortunately, I mean, God bless these families that go through it, man. I can't imagine when you deal with a premature child, premature baby. They're struggling. I mean, this one they talk about, unfortunately, is 16 weeks early, 4 months early in one of these instances. Now, what happens, though, is that check this last part out. So they're in a battle in court. The National Institute of Health, the FDA, and the Centers for Disease Control and Prevention released a joint statement saying there's no conclusive evidence that preterm infant formulas cause this condition. This is where lobbying really comes in, okay? The statement was based on a report the health agencies had commissioned from a working group of researchers and NEC experts in the wake of some comments. We'll be right back and finish this up, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Right now, we take a look at that 5-minute. Yeah, we got some selling. Woo! All right, NASDAQ 100, we're off by 365. We're coming back to those session lows. NVIDIA shares off by 3.5% right now. Oof, Oracle off by 14% right now. Micron off by 3.5%. Broadcom 3.6% to the downside. All right, you jump back to Abbott, up by 0.6%. And so the remarkable part about this is, right, it's just the science. We want to follow the science, right? I want to know. People want to know. Does this cause a problem in babies? I don't know. And sometimes it's not decisive. Like this whole Tylenol deal, okay? It's very difficult sometimes to nail down the one variable that is causing something, okay? And what's remarkable here, though, is that so they get this to be put out by the NIH, the FDA, and the Centers for Disease Control. They put out a joint statement saying there's no conclusive evidence, okay? That statement's based on a report. The health agencies had commissions from a working group of researchers. Now, the plaintiff's lawyers suspected that Abbott influenced the report. When they sought internal company communications about the report, Abbott withdrew its request to use the report at trial. This report said that there's no evidence that preterm infant formula causes NEC. It was from the NIH, the FDA, and the Centers for Disease Control. And Abbott says that, you know what, if you want to see how we got that report, then we don't have to use that report. We don't have to use that report at all. Okay? Yeah, you better believe that there's some inappropriate things that went on when that report got together. They sought internal company communications about it, and Abbott withdrew the request to end the distractions and delays. Folks, that is a remarkable statement, okay? And Abbott says they have no role in the working group, but guess what? Okay, RTI has a relationship with Abbott. It lists the formula maker as a client of its division. So, yeah, be careful of that one, man. That's a bummer. All right, folks, stay tuned. Basil Chapman, he's coming up next. And don't forget, folks, next Wednesday, 6 days from now, he's got an opening call subscriber webinar. Check it out on the front page of TFNN while you wait for Basil. He's coming up next. Have a great one, folks.